Hey everybody, Josh Sigurdson of World Alternative Media here, and we're joined once again by Mark Gonzales over at First National Bullion. We have a lot to go into today because we are seeing the strain we've been talking about a lot as of recently as UBS liquidates funds, faces $500 million exposure to First Brand Fracas, and this is way bigger than just a headline, and it involves a huge, deep amount of corruption and, in my opinion, a lot of desperation going forward as we're seeing bankruptcies among major auto parts makers. We're seeing a lot of people start to question the stability of the banking system in general as well. Obviously, cash to deposit ratios are extremely low. Derivative exposures are extremely high. And as we've done recent videos on, there is a major risk that banks could see a collapse, and that would cause kind of a contagion, a domino effect. And we've also gone into multiple times what you need to do in that case. We have bail-in regimes coming in. We have all these other issues. And simultaneously, we have some serious market problems as the Daily Mail reports Big Short, Michael Burry's $1 billion bet on a market crash pays off as stocks suffer worst day since tariff meltdown. We are witnessing history unravel before us, and I'm going to go to Mark right away about what all this means and what exactly is going on with UBS, because this needs some unwrapping here. But before I do, I urge people to check those links in the description. Check out our link for www.firstnationalbullion.com/schedule-consult/. You have to use the exact link that is in the description of this video. Make sure to go and check that out. There you can buy physical gold, silver, platinum, and palladium. Avoid the digital ID system. Avoid the CBDC system to come. And you can hold that gold or silver in your hand, put it in a vault, or put it in an IRA outside of the traditional IRA system. Make sure again to use that exact link and schedule an appointment at that link for a free consultation with Mark Gonzales, and you'll also get a complimentary investors package. Just let him know in the comments of the forum when you sign up that you found him at World Alternative Media or WAM, WAM. This is very important. Mark, we are facing history, and every time we get together to make a video and try and break down the recent news, there's like a battle over what are we going to talk about, because there's so much happening at once. And this is always seeming to, benefit not the people, but exactly what we've been trying to warn about for some time, what we're seeing with UBS. Can you go into what exactly is happening there? We see this major move by UBS to liquidate all these funds. What does all this mean?
Okay, so to understand what they're saying, and it's actually quite simple to understand, and both these stories kind of tie together, especially with Michael Burry. So if you have to go back in time a couple months to where TriRicore, the subprime auto lender that we were talking about, subprime risky bets, they packaged this stuff up, tranched it up. You have multiple layers where these debt instruments, much like 2008, but on a larger scale, are repackaged, sold to someone else. They're on their balance sheet. They repackage, put another bunch of crap in there, good and bad, and then sell it to someone else. So it's really all fictitious. So TriRicore goes down, and their parent company, First Brands, that's who UBS had on their balance sheet, right? At one point when TriRicore went under, UBS had a 30% of their portfolio assessed to this firm. Now, it came out, not a shocker, that the founder of TriRicore, owned by First Brands, that this guy was kind of embezzling money from the company, right? They were creating shells. They were lending from their own balance sheet off derivatives to their auto parts stores, to their lending divisions, while this guy is buying $100 million properties and yachts and whatnot. So the real shocker.
Not shocking.
The thing that you got to realize here is the layers of this, and at the core of why UBS is making subsequent markets to counter their risk is at the core. It's fraudulent. It's bullshit, right? So we don't even know how bad this is going to be. It started out at about 5.8, just under $6 billion. Then we found out the overshadowed derivatives, which we haven't even uncovered or hasn't been uncovered. So you're talking a pretty big allotment of funds that has gone into default. Nothing major compared to what we're going to see. So what UBS essentially has done, and they are doing, and they're notifying their clients, is that they have this exposure to risk, which is reduced down to just over 20%, which they have an agreement with their shareholders that they will not control more than 20% of their balance in any one asset or not. So they blew that entirely. So they can't just sell this stuff because there isn't necessarily a market for it. So you got to kind of unwind, unpack, repackage, and create something new. And what they've done and how this ties together is they've created a subsequent fund to manage that risk, right? So on the right side of the trade is where they're going. Now, where I'm tying this into, Michael Burry, let's go back to the movie The Big Short, right? And what actually happened in 2008. Same thing. You had all these subprime mortgages that were maxed, put in with some A, some AAA, and they were sold to pensions again.
Yeah, collateralized debt obligations.
Exactly, the CDO. So they're packaged as AAA because, again, pensions that everybody's relying on, which aren't going to be there. The government and the Fed stole them a long time ago. So don't hope for that. Be your own hero. They can't invest in anything besides like the AA plus, mostly AAA, but you don't get the 7 to 12% yield that you must every single year to keep those obligations going. So that's one of the reasons why all these instruments were created. And if you remember the movie The Big Short, everybody's paying margin or premium to keep positions in play, the insurance policy in play, when what it is, insurers actually burning down. And it wasn't until these institutions actually got on the right side of the trade and they were able to get their own credit default swaps as a short against the collateralized loan obligation, debt obligation. And once that happened, everything, fell to crap. So
right.
They didn't tell you that was the case. We had to wait till a movie and some more investigation to find that out. Now UBS is actually letting you know, hey, by the way, we effed up. We need to create a subsequent market to offset our risk and get on the right side of the trade. And meanwhile, in the back door, they're trying to unload all this crap to everybody else. And the fact that Michael Burry in the mid 2000s actually recognized this. He's one of the only people that recognized it just by doing market analysis and following what's going on. It didn't just fall in his lap or you hear it over a conversation like many other people did. This guy did the hard work, and now he's placing bets against some of the biggest AI companies out there. So that should scare the hell out of you. One, the core of the problem with UBS is a fraudulent company, which we don't even know how bad it really is. Second, you got these investment bank divisions that are having funds in excess of what their shareholder commitment is going to be. And now they're subsequently making shorts themselves to offset the risk. So it's the same damn thing being played out, except that now it's a little bit more in your face. And this isn't going to be the only one.
Well, that's actually what I wanted to get to, Mark. I mean, this sounds familiar in a lot of ways to what we've seen as far as the corruption goes with Wells Fargo, Deutsche Bank, other banks. But UBS is not alone on this. For sure, they're not alone in what they're doing right now. They're just exposed. What does this mean for the future of other banks and what the kind of desperation factors surrounding this, as well as what it means for the depositors at these banks?
Well, expect bail-ins, because when you start to see someone like UBS, and they're not the only one that's tied up to this. There's a couple handfuls of hedge funds and dealers that are actually tied up in the TriRicore debacle. But it's one, you got bank reserves that are piss poor. They're some of the lowest that we've ever seen, right? You got a market capitalization of what bank obligations or valuations are, many of these in the derivative market, which is the layered loan upon loan, obligation upon obligation. But you have that one auto loan or automobile to satisfy 100 obligations. Same thing. You have that. You get the point. Yeah. When you couple all this together, and the capitalization of the banking industry in the U.S. is grossly above what the global GDP is, and we're starting to see a little bit of cracks in this, I assure, as far as what the depositors can expect is you're going to start to see bail-ins. You probably might even see a few of them next year. The intent, again, was to be cashless on a digital system. Per the Bank of International Settlements this year, we're behind schedule. So moving forward, it just depends on how fast they ratchet this stuff out. The system for digital technocracy is already in play. It's just when they actually pull the switch. So
yeah, they need the right crisis. And of course, out of that, they bring in their new tyrannical system of technocracy. And of course, we already have the digital euro in Europe now, which again was launched last month to very little fanfare, that we warned about it for quite some time. And it will be enforced eventually. They say everything is voluntary at first, but then they leave you out of everyday life if you don't bow down to it. Same with the digital ID that's being mandated in the UK and the several other digital IDs that they're mandating in the future in the UK. Same with the real ID in the United States, and of course the CBDCs that they're trying to unroll through the Genius Act in the United States. Same with the biometric CERP in Mexico. Same with the CBDC and digital ID they're trying to roll out in Canada. Australia, I can go on and on and on. The point is, in the face of the collapse of and the inevitable collapse of the banking system, they are coming in with a replacement so they can say, don't worry, we are here to save you. We are here to help you and solve the problems we created in the first place. The downside, of course, being that then you will be forced into a Logan's Run type situation where you cannot escape that system and you will be completely dependent on them. So, Mark, yeah, we are seeing that push for bail-ins. And of course, we have Basel III, like we mentioned a million times in our videos. 63 central banks signed on to it over a year ago. And of course, that also involves a big rush towards that which is wealth insurance, that which is insurance on what this crisis is creating. Obviously, people want to be able to stay safe and keep their money safe, which they worked hard for. Unfortunately, the FDIC is not going to keep you safe. If you're watching right now, the FDIC has acknowledged that they're bankrupt. They cannot cover this kind of stuff. They said themselves in their own meeting papers back in November of 2022 that banks will close one day on a Friday and they will not reopen on Mondays, and we will have to bring in emergency orders to get ourselves out of this situation. And I believe that what we saw with Silicon Valley Bank and those others was just like a precursor, a little warning shot of what's going to happen next. Of course, they bring in the Exchange Stabilization Fund, their war chest, which was funded with gold back in the 1930s alongside the IMF to try and put out the fire, but that will only last so long. Of course, they only have so much money, and they certainly only have so much gold, though they're trying to stock up on that. Fort Knox doesn't have what they say that it does. All the same, people are rushing to buy physical gold and silver right now, and it's actually causing shortages. We're seeing record highs, but people are acting as though this might be the top of the market, and it's just ignorant. It's naive to see it that way, considering the fact that the dollar has all the way down to go, which means gold and silver have all the way up to go in correlation with the value model. So, Mark, I mean, why is it so important for people to look at, go and check out the link in the description, contact you, talk to you, and get involved in actually insuring their wealth?
Gold and silver is the actual money. And I said this before, you need to retrain your way of thinking, as opposed to the indoctrination or the brainwashing that the paper currency known as the US dollar, the fiat, is the actual money. No, it's the accounting measure of the actual money. And it's hard to realize that. I actually spoke to someone that saw one of our videos, and I'm kind of coaching her along on how to do that. It takes a little bit of time, but not only that, if you see UBS getting insurance against their crap, for one, they'll come out okay. They'll make a fortune on that. They're going to write off the debt. They're going to put it on other suspecting brokerages and banks, and we're going to have this consolidation. Or maybe UBS is one that wants to slot it to fail and they don't survive. But you can't participate in that swap market unless you got millions and millions of dollars.
Right.
So it's not going to benefit you, but you see these people getting their insurance to protect their ass. Now, insurance is the terminology that a lot of people use for gold and silver. I use money, but if you want to consider it insurance, let's look at what other central banks are doing. They've been importing and repatriating their gold back home. You see metal leaving vaults clearly at a rate that's been absolutely unprecedented out of London and New York and the COMEX. That's simply not going to stop. And I got to reiterate, as far as the value of the money itself, let's talk about that 64 quarter. If you take the 64 quarter, in 64, you could get a gallon of gas, and even through 65 a little bit. It was around 23 to 28 cents, sometimes 30 cents in later 65, coming off that matrix, because we had 90% of the weight of the quarters, the dimes and the half dollars, through year 1964 had 90% of their silver weight. So you take that quarter versus silver today, and you're looking at about $8-9. So it's not only getting you a gallon of gas, it's going to get a lot higher. As for those individuals that are out there saying the market's topped, You're doing that based on a chart pattern or what your investment advisor is looking at as a chart pattern. And you're thinking, okay, what goes up must come down. Yeah, theoretically, but why did it come down? It came down in the 1980s because they raised the margin rates. It came down in April of 2011 because they raised the margin rates to save JP Morgan. So the narrative was, if you're looking at the chart, it looks like the gold and silver, they don't perform all the time over time, that they have massive collapses. Now we are in a downtrend. I do expect it to continue to follow, but it may change. We're above certain thresholds on silver at 48, closing on Friday. We're just below 4,000 on gold. You can see this thing rips off come Monday, but my guess is it's probably going to trend a little bit lower. Now, keep in mind, the longer it stays here or goes in even lower, it's going to increase demand. Now, physical possession or physical metal is different than paper. People take that off the market. It goes into tight hands, meaning that the bid or the premium you're going to have to pay to get it out is going to come higher to close. Look at Venezuela back again, and I've said this before, broken record, Mark. 2017 going to 2018, gold in the Venezuelan Bolivar, I mean, it went from like 11,000 up to like 17,000, and everybody thought that the run was over, so they exited to sell gold. And then a lot of people thought, okay, well, I don't want to buy because I'm not going to buy at the top. Well, damn it, wouldn't you know it? The gold price then went to over 200 million Bolivar. Now, that's not going to say that that's going to happen in the U.S., but we're talking about exchange rate.
Yeah,
right.
Yeah, we're talking about inflation versus, I mean, the value of the dollar versus the value of gold. When we are using the dollar as an accounting value to base the price of gold off of, we're not thinking about the fact that, that dollar is becoming more and more worthless all the time, making, of course, gold soar. And of course, in the long term, if you zoom out on things again, you go back to like 2012 when people said, oh, well, gold hit 2000 or 2200. It's a historic rise and it's going to fall and it's going to be worth nothing. If you bought a bunch of gold at that so-called top right now, or back then, it would have doubled in value and it would have more than beat inflation. So, I mean, it goes to show really, just zoom out. Don't think of it in the 1 month or the 2 month. Look at it in the 5-10 years where you are saving your wealth from imminent absorption by this mosquito, this behemoth that is the modern monetary system that's going to force us into that digital system. It's so important that people understand that dollar is not going to be worth almost anything in 10 years. It's very important that people acknowledge this.
Okay, well, let me interject. So dollar's not going to be worth anything by 2030.
Yeah.
Right? Because even if they don't go cashless till 2030 and you got a couple of years, it's going to be a pretty bumpy ride. What if you lose your job? You need to prepare now. So as far as that longer term plan or viewing something as opposed to like what the Venezuelans did, thinking it was a top, sold, thinking it was a top. Yeah, they hyperinflated. And guess what? They got a new accounting matrix and they changed the valuation of the currency. So who's to say that that's not going to happen to the US dollar? Because that in fact happens. And when you want to look at a longer term view of something, what is the longest term view of a monetary asset or money that you have available to view right now? That is MF and gold. It's silver. This stuff has been used as money before Christ walked the earth. They've been manipulating the value based upon nominal and notional in a physical coin market. They're about to do it again. And when the dollar, which prices everything via the exchange, goes away, what does that mean to the global markets? Everybody's affected. Mm-hmm. The price of everything has to reset to normal true value, which you got $1 to $3 to $5 back in every $100 in trades. It could get really ugly. And these are the warning signs. So is it going to happen tomorrow? No. Could it? Hell yeah. Not tomorrow, come Monday, but it
absolutely not on the weekend.
We're at that point where this could seriously happen. And I've been saying that to usher in the switch to this digital system or to get everybody hooked in real on it is you're going to have a major market collapse. You're going to have some sort of preemptive short-term hyperinflation. Maybe even before the market collapse, you're going to have another lockdown. You're going to have a cyber attack. Something's going to come. And now whether the market margin run or margin event that I've been speaking about for quite some time is the one that's officially labeled it is going to absolutely happen because the destruction of debt is the easiest way to write off the balance sheet and go to clean. Gold, silver rise to meet the default by 40% of the default, putting gold and silver way, way, way higher. So don't look at where you're buying it. Yes, try to get the best deal possible, but tell you what, none of it's going to matter at the end of the day. And what if you you miss it by a month because you get sidetracked, and next thing you know, gold rallies back up to $4,500. Silver goes to $60.
Yeah.
But to find it is a difficult thing to do.
Oh,
Now you just
absolutely.
got it yourself.
And I mean, sometimes it takes a while to move money to make it happen as well. There's a process and everything involved. So it's important that people think about this now, get on it now. Don't sit on your hands. What we're talking about is going to happen. It's not about fear. I don't want anyone to be in fear. I just want people to see the reality of what's happening around the world so that they can make the proper decisions to make sure that they don't fall victim to what is being rolled out, which is inevitably being rolled out. It's impossible to avoid. You cannot deny it at this point. Everything I've been talking about for 15, almost 20 years now, 19 years, talking about the whole monetary system issue. The amount of things that have come true, it's just unreal. And people act like, oh, well, you said 20 years ago or 15 years ago that the dollar will crash. Yeah, because all fiat currencies eventually revert to their true value of zero. They always have, they always will. And this time's no different. We're not in some weird bubble where that's not going to happen. It's going to happen. They're going to shift into the CBDC system. But of course, the dollar doesn't just happen, doesn't collapse overnight. It happens over time. And we've been watching it collapse over time. And now we are at this point where they're talking about bank bail-ins, and we're seeing these emergency orders across the board, and banks freaking out and doing whatever they can to stay afloat. Again, we are witnessing history. All the more reason for people to take this seriously and check that link in the description. That is, of course, firstnationalbullion.com/schedule-consult/. It has to be that exact link, not a shortened version. It has to be the whole link. It's in the description of the video, all the same. But there you can buy physical gold and silver, get out of that CBDC system, get out of the trap of keeping all your money in the bank and then being used via your money as a dependent on that banking system in the upcoming digital system. It's so important, not just the digital system. Throw the whole digital system away, you still have the issue of that dollar being worth way less in the future and you're losing value. So I urge people to go and check that link in the description. Buy physical gold, silver, platinum, or palladium, hold it in your hands, put it in a vault, put it in an IRA outside of the traditional IRA system, and of course, schedule an appointment for a free consultation with Mark Gonzales and a complimentary investors package you'll get with that. Let him know in the comments on the forum that you found him at World Alternative Media, or WAM, WAM. Again, that's in the comments on the website when you go and click on that link. Very important. Mark, always very insightful, and I appreciate you breaking this down for people, because at just a glance at the headline, it doesn't, I mean, it sounds bad, but it can be confusing to a lot of people. So I think it's good that you broke it down and gave people the kind of the macro view from a mile high of exactly what's happening here with UBS and how this correlates with what we're seeing with the stock market as well. I appreciate it. And we'll be back with much more with Mark coming up very soon. There's no shortage of news, as everyone knows. So make sure to check that link in the description. Mark's awake. He's been doing this for a long time and he's here to help. So go and check that out. Thanks again, Mark. And until next time, this is Josh Sigurdson and Mark Gonzales signing out from World Alternative Media. Find the truth, be the change.